So happy Saturday, everyone. This is Greg Dixon here with Ivan Terrero. And last week we were talking in our roundtable discussion. It turned out that quite a few of us had some stories or experiences with trading, either on the stock market or options or crypto, and 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 there were some. To some degree, some of the experience with trading was why people ended up buying and selling mortgage notes because it seemed like a lot less problematic. But I think it is possible with the right strategy and the right skill to be successful in any of those trading markets. And today, Ivan's going to go take a look at show us some actual trends and charts on the stock market, probably for the last week or whatever. But and then just to get an idea of what we're talking about. So let's pop this on the screen. I can get my little mouse cursor over in the right spot. There we go.
Okay. Can you hear me?
Yeah, it's all good.
Okay, let me adjust my screen here a bit. Sorry. Last minute adjustment. Okay. This is better. Okay. So my name is Dr. Ivan Terrero. I am the Note Doctor, and I just wanted to give some of my experiences with trading. First of all, stocks, then options, and then Forex, and finally crypto. So my first introduction to stocks was formally in 1999. And if you remember 1999, besides that Prince song, there was a little thing called Y2K. Greg, do you remember what happened then in Y2K?
Oops. Yes.
Okay. So at Y2K, there was some brouhaha that
It was a hoax.
the hoax that the computer systems could not go back through the next century, and they were not available. The software was not able to handle that, and we were supposed to have some chaos. But
Yeah.
also something else that was going on in 2000. There was a small company called Qualcomm, and Qualcomm had invented, I guess, the chips to go into the emerging technology called cell phones.
Yeah.
And Qualcomm it was the hot stock of the day. Younger people will have heard of Tesla. Qualcomm was the stock that you had to trade. And I took a course with a guru. I lived in New York then, and he showed us a chart of Qualcomm, and that stock would go up 100 points a day during a certain period of time. I see Rodney's nodding his head. Do you remember those times, Rodney?
Oh yeah.
Okay.
Yeah, Nvidia is kind of in the modern age here. Nvidia is the same kind of thing.
I don't think Nvidia is the same as Qualcomm, because Qualcomm was ushering a new age of
Yeah.
chips that were totally different,
Yeah.
and to power cell phones. And
It's similar in that it's a chip technology, and it's had more or less spectacular gains over the years, except for the time when I was trading it. So anyway,
what happened
yeah.
with Qualcomm, at that point in time, the stock market, especially the Nasdaq, was going bonkers. You could have thrown a dart at a stock, and it would have gone up.
Yeah.
This was a time when infamous stocks such as Pets.com and I think, what was the other one, Roddy? Please help me. Just about any internet stock, you would put money in it, and you would bet on it, and you would make money.
Yeah.
And because of that, the guru was teaching on options, on buying options. So at that time, we were buying options on Qualcomm, and the other stock that was really hot at that time was, let me see if I can find it here. It was called Uniphase. And then it was JDSU. That stock no longer exists. It was it was actually a Canadian stock that merged Uniphase and JDS. It became JDSU, and that stock also went up like bonkers. Another stock that went crazy during that time was Research in Motion. So anybody that bought stocks, anybody that bought technology stocks in that time was thought they were genius because they would go up and up and up and up and up.
Yeah.
But what happened is that the 2000s came along and Y2K was overblown. But in March of that year of 2000, what happened is that the stock market collapsed. The Nasdaq collapsed. It was known as the tech wreck. So during that time, I had taken seed money, and in less than 3 months, I had quadrupled that money. And because of talk about greed, I thought I was a genius. I thought I knew what I was doing. Any stock that I would invest in, it just went up. And I thought there's only one way to go but up. But that taught me something which the guru did not teach. It's called money management.
Yeah.
So I was able to scrape my money, part of the money that I had earned, and save that money. As a result, I learned how to take money off the table when I was making money on these trades. However, that led me to the second phase of learning how to trade. So I learned how to trade credit spreads, and it's akin to, excuse me, being an insurance company. Basically, you would get money, you would receive money on a trade. Um, you would receive money as a credit on your account if the trade went your way. So by trading these spreads, you would be you would have the safety if the stock went up to a certain point, you would still make money. And if it went down to a certain point, you would still make money. The stocks had to be in a certain range.
Yeah. Can I jump in a bit? I just
Sure.
want to do a real brief introduction of what an option is.
Mhm.
So instead of buying the actual stocks, what you're doing is you're buying the option to either buy or the option to sell the stock, and you buy that at a certain point. And what Ivan is talking about is if you buy an option to buy the stocks, and it goes up higher than your option to buy it, then you're going to make money. So, but Ivan's talking about a different strategy with the options. I just wanted to, in case you've never heard what the word is, it's really an option to buy or sell. And then the math behind the options is probably more complex than maybe 10 people in the world actually truly understand it, but you don't need to know all of that in order to trade options. And anyway, sorry to interrupt, but continue.
Actually, that brings me to another point where there was a company called a hedge fund called Long Term Capital Management, where
Yeah.
they actually I think they earned a Nobel Prize. One of the principals earned a Nobel Prize on pricing options, and it worked for a while. But actually, that company went bankrupt because all their options turned against them, and they lost all this money.
Yeah, from my experiences, you've got something that works for a while. You think you understand how it goes, and then the conditions change, and what worked last week won't work again. So it's really it's the other thing about options is they de, decay over time. So
Right.
it's really is something to consider.
So going into options, there are a lot of terms that option traders use, which is gamma, theta, and delta. Delta is the spread between one price of the option and the other option. Theta is the decay of that option over time. And those options, the theta decreases every day that passes by. So what you're looking for in options trading is to have positive theta, not negative theta, meaning that the value of the option increases. Or when you're trading these options, that you have a certain amount of leeway with the price that you buy the option and the price that you sell the option. And again, this takes me back to what I thought was going to be my saving grace in options. At that time, I discovered futures, and the futures market is actually a very, very big market, and you can trade futures on just about anything. And the futures market was actually invented by farmers because they would need to buy, say, corn or grain for their crops, and they wanted to make sure that they bought these products at a certain price in the future. So the futures market was developed to help farmers in their in their farming operations. That's why it developed out of Chicago, because Chicago was the center in the middle of the country. The thing about futures is that it's highly leveraged. So when you trade something that's highly leveraged, you can make a lot of money, and you can also lose a lot of money. Think of it this way: one futures contract is worth, I think the example is corn. One futures contract is worth 5,000 bushels of corn. So if you trade a one lot of corn and the trade goes against you, guess what? Next Saturday they're going to be delivering those bushels of corn to you.
Yeah.
So
And
in theory that's what happens, but you can unwind that trade so you won't have to have those 5,000 bushels of corn in your front yard.
and those 5,000 bushels of corn could cost you hundreds, tens of thousands, hundreds of thousands. So
Yes.
yeah, so that's the leverage. If it goes wrong, options can be the same too. If it goes wrong, you could be on the hook for a lot.
Right. And I thought the futures market was something that I could have learned how to trade, because you trade early in the morning. Well, actually, futures market trades 5 days a week. No, it's actually 6 days a week all over the world.
Yeah.
And you can trade where the action is during the morning before the market starts, and between the first half hour of the day. Then continuing with my quest, researching, I came across the forex market. And if you think the stock market is big, you think the futures market is big. The forex market is, I think it's 32 times as big as the stock market and the futures market together, because every country has its currency. So you can trade the difference between the United States currency, the dollar, and the British pound, the British pound and the Swiss franc, and the Japanese yen. You can even trade what they call minor pairs, which are the South African. I don't think it's called rand anymore, but the South African country
Yeah.
currency. You can
Yeah.
trade any currency because uh, commerce is worldwide now. So I decided to learn the forex market, and I think there's something similar, something diabolical about these markets, because I focused on one type of trade. I think there's a quote by Bruce Lee said that he's more afraid of someone who's practiced a kick 100 times than someone who's practiced 100 kicks one time. So I decided to focus on one type of trade, which is similar to an option trade, which is I would get a credit for this trade. And with forex, you're trading in pips. Basically, these are one unit of a currency. It's like trading 1 cent of a dollar. So the
Did,
more pips you accumulate, the more money goes into your account. So
Ivan, did you say pips?
pips, PIP, yes, pips. Right. So I decided to combine what I knew with options and forex, meaning that I would be getting a credit for my trade. Once I would make the trade, it would be deposited in my account, and I would close that trade once that would be in my account. Um, I actually spent almost 6 months doing these demo trades, and I had a win rate of 65% doing the demo trades on the demo account. So after doing these trades, the demo trades quote live, I decided to go and trade real money. And in less than a month, I had lost my trading capital.
The analogy I use for sometimes is like almost anybody can make a 3-foot putt in golf. Almost nobody can make a 3-foot putt if it's worth $1 million, right? It's just it's a mindset thing. It's completely different once it's real money. So,
and that is true. It is completely different when it's real money. And throughout the years, I discovered that trading is a hard business. I think my conclusion is you have to be hardwired to be a trader. You have to know when to take your stops, like that country song.
yeah.
Yes.
Know when to fold them.
When to fold them, exactly. And through my research and reading of traders, I guess the most famous trader in history is called Jesse Livermore, and he actually lost the equivalent of he lost two fortunes in his lifetime, and this was during the Depression. And I don't know what happened to him, but he committed suicide. Yeah. And I noticed that a lot of traders have these addictive personalities that leads them to this path. That's just my observation. I don't know if there's no I can't there's no quantifiable study.
Yeah,
I've seen that in a lot of traders where they have this addictive personality.
It can be like a gambling addiction.
Right, a gambling addiction. And there was one trader, actually he was a millennial out of Japan. He actually started out as a gamer, playing video games.
Yeah.
And he decided to go into trading, and he made a whole lot of money. And I think my son told me that again he took his life. Now, that being said, trading, what I've come to the conclusion is I've decided to follow Warren Buffett's the Oracle of Omaha, and what he basically does is this in a nutshell. He buys the S&P 500. He buys companies basically that are making money, and he holds on to them forever. He once famously said that he wouldn't buy a lot of tech stocks because he didn't understand the business. He owns companies like Coca-Cola, Caterpillar, GM, companies that actually make things. And 10% of his portfolio is based on treasuries. So again, going back to stocks, it is so complicated. You can go so much into the weeds. You can go into this chart you see here.
So I'm just going to go with Warren Buffett. He also, his practice also is he buys a stock, but he'll also buy a long-term option to offset just in case it goes the wrong way.
Yes, exactly. So if you look at, there are so many indicators, so many things that you could possibly trade on that I think, in my humble opinion, that it can drive you crazy because there are things called candlesticks, which has a body, a wick, a color. If it goes in a certain way, it means that can you see my screen?
Yes.
Yeah. It means that if it bottoms out this way, it can go up. This is an inverse hammer. This is a bullish engulfing. This is a piercing line. This is a morning star. These are three white soldiers.
Yeah.
These are bearish candlestick patterns. This is a shooting star. I don't know where they come up with these names.
Yeah.
This is a bearish engulfing. This is an evening star. So Can you tell me the difference between an even star and a shooting star?
I think one sort of signal's going down and the other signal's going up.
Because
But
there's a cheat sheet right there. You see?
yeah. So my experience with this is somebody's really skillful. They can anticipate where the pricing's going according to this, but it runs on the assumption that things are kind of oscillating, and
Mhm.
the thing is that they don't always. but yeah, but if you're really skillful at understanding what's happening, you can make money.
Yes. So early on, see the screen. This is Tesla.
Yeah,
I was still learning trading options during 2016.
yeah,
Tesla came. If you see my screen here, um, Elon Musk was not the CEO of Tesla at this point, and this is when Elon Musk started. Uh, I think it was at this time where he started as a. This is not to scale.
yeah,
This is when he became the CEO of Tesla, and Tesla had similar patterns as Qualcomm back in the day. It would go up 50, 100 points during a trading session. And let me go back here. Let me see. So this point right here, I had bought the stock. It was opened up at 260. I bought the stock because it had a pattern that I recognized. And for the first, I think it was 2 months, it went up and up and up. Then all of a sudden, it's gone all the way down and down and down. And it's right now, this is where Tesla is right now.
yeah. So I knew people who just day traded Tesla because in the morning when the market opened in the morning, it
Mhm.
would either jump up about $10 or $20 or jump down $10 or $20, and so people would basically get ready and they either sell if it went up and buy if it went down, and 2 or 3 trades later their day is done and then go to the beach just on Tesla.
That's true. But I can almost guarantee, uh, are those individuals still trading?
Oh yeah.
They are. Okay.
Yeah.
They're real traders.
Because I was paying money to look over the shoulder of somebody, and they would do. Tesla was one of the ones, but they also did commodities, like as
Okay.
you're saying, oil futures,
Hmm.
and they would behave the same way during a certain period of time. And the thing is that in the trading day, it only really worked at a few times during the day because the rest of the day it sort of was not not much motion. Almost all the action was at opening bell.
At opening bell. Yes.
But you have to have for one, you had to have the capacity to do it, and you had to have nerves of steel, and
Mhm.
the ability to make the right decision fast. It's a hard way to make a living unless you enjoy that, really.
Yes, you have to really enjoy it. You have to have nerves of steel. And what I found out when I was trading, especially in the forex market, there are programs that if you put in a trade, especially a certain size, there are programs that will take the opposite trade. So it's called high frequency trading,
Yeah,
and bots are really popular now. But actually, the bots were became popular during the trading because they can place these trades automatically.
yeah,
And these the companies behind them would put the trades in, say, 2/10 of a second before you did, and it would be 2/10 of a second before you were out your trade, and they would make all the money. And I've seen my stops, especially in forex. I would put tight stops, meaning that if the stock my trade would go in a certain way, I would be out. The trades, there would be so much volume in those trades that it would blow through my stop, and I
yeah,
would wind up losing money.
yeah.
Dr. Ivan,
Yes.
how long have you been a doctor?
I have been a doctor for 34 years.
how did you have time to invest in the stock market then? I mean, I would be so vigilant and trying to monitor what's going on. How did you find the time to balance everything out?
So back in the day, 1999, we didn't have all these computers, so we had to call in the trades, and I would call in the trades early in the morning to the broker, and at mid morning, once the trade was in, he would leave me a call in the office. Okay. Once the computers came in, it was easier for me to place a trade online with the tight stops. So I would research my trades after the kids were in bed, and then I would place the trades. So, and I would get the notifications either on the desktop or on my phone.
Let me share my experiences with stocks. It'll be brief. It won't be long. But in my early days of investing in real estate, my fix and flips, my rentals, it afforded me the time and availability to invest in some stocks. I didn't have a clue to what I was doing. I just knew, there was a couple of companies I liked, and I wanted to be in. Now, I made a mistake of choosing margins to be involved in stocks because I didn't have a lot of money. So I bought companies like Ericsson, McDonald's, Sunrise Assisted Living. They were good companies, good, Microsoft, all of them. And they were rising. I made some good money, and I was just riding the wave, and then until it wasn't, and then it crashed. And I had a margin call. I ended up losing, everything. I had to close out all those accounts. It was. I still watch those same companies that I invested in. I said, wow, if I had been able to hold on to them to now, woo, man, I tell you, I would be sitting pretty, but I couldn't hold on to them. I even got involved with, I saw this infomercial guy came on, Ken Roberts.
Ken Roberts?
Yeah.
The guy with the hat?
Yeah, the hat.
Yes, he was trading commodities.
The commodities. I tried my hat in that. So I was trying to do stuff that I felt if I could get involved with it and sit and let it ride, it would benefit me in the long run. But you don't know what you're doing, and you don't understand it, and you don't study it to a certain level. You can really, it can be painful for you.
Can be. So my brother and sister-in-law were doing day trading and swing trading for the longest time, but now they don't do that. They buy stocks that have a reasonable chance, like Warren Buffett would, that's likely to increase over time, and they're just looking for high dividend stocks. So it's kind of like passive investing in the real estate space. You're looking for with dividends, you could make 4 or 5% a year with some of the better ones, maybe even better than that. But so then they're not getting anxious if the like that the stock here QCOM and like Nvidia went on a constant tear for about 2 years, and then it slid for about a year, and then now it's been a pretty good, after it slid, it's a pretty good buy at any time. But you don't necessarily, that's all evident in the rearview mirror.
Right.
You don't know if it starts sliding. You don't know if this is a 2-week thing or 6 months. It's like the entire stock market dumped about 60% over a year, and the crypto market also did. So it was really hard to make money in there unless you're doing something like options or selling short or something. But it was really, it's a lot easier when things are going up. It's easier to look like a genius when everything's going up.
Anybody can make money in an up market. It's hard to make money in a sideways market. And actually, what I did learn is that when you have a certain indicator, it's called the Bollinger Bands
Yeah.
and volume. Once you trade that between that range, you have a margin of safety where you can sell that stock or you can sell that option. And then when it goes to a lower point, you can buy it.
Yeah.
But it got to the point where my family got bigger, too many things to do. I had another office to take care of where I couldn't take care of all these things. Back when I started, I had uh, two small kids, had a smaller office. I had, it was easier when they were little, just come home, play with them, burp them, change a diaper, and that's it. You know?
Yeah.
And that's another thing where with stocks and options, there are so many strategies. I mean,
Yeah.
not just buying, selling, not just buying and selling calls and puts. You can buy spreads. You can sell spreads. You can do iron condors. You can do broken wing butterflies. You can do butterflies. You can do um, leaps. You can buy. You can do futures on options, options on futures. It is mind-boggling. And then for you to hone in on a strategy that works for you, it is difficult. What I did, like I said, what I do know now is that I trade. What I don't trade anymore. What I do is for my IRA. I follow what Warren Buffett does because I buy stocks. It's
Yeah.
called dollar cost averaging because I'm not going to need the money until I retire. But um, I've known so many people in my friends of mine. I actually had a friend of mine who had a trading company. He had software, and he had a group of people where he taught trading. He was trading futures. He did that for 6 years. He blew out his account 3 times, and I'm not talking about $100,000. I'm talking about a big account. And he said it got to the point where he was getting nervous, and he felt like it was more like gambling than it was a business.
Mm.
One of his students, actually a friend of mine, went to the same church until he moved away. He said that he started out very well. He was making money, but once he saw that he was making money, quote, easy, it felt like it was uh, addicting. So he stopped that right away. I have two friends, two doctors. One is a pediatric dentist. He actually became a prop trader. He worked for a firm after finishing. He didn't know he wanted to become a dentist until later on in life. He worked for a firm in New York. They trained him to become a proprietary trader for the company. And he stopped doing that to become a dentist, but he still trades because at heart he's a trader. But he only trades on his days off.
Yeah.
I have another friend of mine who he's not a trader per se, but he's like one of these geniuses, I call him, because he trades. He learned this all by himself, and he has 3 businesses. I don't know how his mind is can handle all this. But those are the only 2 people that I know personally that are still trading at a part-time basis. And I actually before that I followed someone who had a website. He had his trade ideas, and it got to the point where he actually gave up the business. He closed his business because it got to be too much for him. So I'm saying all this because this led me to become a note investor.
Yeah.
Into all this, okay, experience with my dad and owning property.
Yeah.
And my dad owned. We're from Dominican Republic. He owned lots in Dominican Republic, and we still have 2 farms in our family. And what I noticed when I knew one time when we were younger, that one of his businesses failed, and what he fell back on was real estate. That's why it's called real estate. With stocks and options, you don't have anything to touch. You have a piece of paper. Before you used to get a stock certificate. Now you don't even get that. It's all electronic. So there's nothing for you really to hold on to. And that being said, I got started in my real estate journey by buying empty lots and building houses on them. So with real estate, it's something you can see, something you can touch. It has intrinsic value. Even if the house burns down, you still have the land. And like someone famously said, buy land and not making any more of it. So that's what led me to becoming a note investor, because uh, actually with notes and in real estate, you can have the option to buy or to sell that property, much like a stock. You can
Yeah.
say, uh, Rodney, I'm going to buy that piece of property. I'm going to buy your lot at say $4,000. Give me the option to buy that property for $1,000 2 years from now.
Yeah. Dr. Ivan, that was a nugget. I like that. You know, that analogy. That's why it's called real estate.
That's why it's called real estate.
Yeah.
Love it.
So yeah, so that's how come we ended up with this conversation, because last week I guess Larry said he's been investing in art as an investment, right?
Mhm.
So then I think Ivan said he'd been trading, and I've been trading, and
Mhm.
it's yeah, I'm still I think with some skill and discipline you can make money trading, but it's right now like I trade cryptocurrencies, mostly like coins.
Oh, don't get me started there.
Yeah, but it's purely like crypto, as you said, that like real estate is connected to a land. Even though some of the crypto people say differently, there is no value in there other than the perceived price value of the people trading it. So it's it can go up and down. The good thing about it relative to options is it's never going to disappear. Like your option can become worthless in a minute. So,
Exactly.
So yeah, there is.
yeah,
I got early on with Bitcoin. I
yeah,
actually heard of Bitcoin when it went up to $1,000, and back then
yeah,
that was amazing. No one had ever heard of it. When it broke $1,000, that made news in the trading world. And I dismissed it just much like I dismissed Tesla because I didn't believe in it. And uh, I rode that wave till it hit around $7,000, and I said it's not going to go up any higher.
yeah.
I actually sold all of my crypto then, all of my Bitcoin, and what did I do with that? I actually bought a piece of property. I bought some land.
Oh yeah. So my ex partner's brother was talking about Bitcoin when there was trading at 25 cents, right?
Oh my
But
goodness.
as far as I know, he never ever did much with it.
Mhm.
And I parked our RV in a friend's yard, and she said, don't hit the Lamborghini. Anyway, the Lamborghini was probably some her son's friend probably represented $200 in crypto or something, and now it's a Lamborghini. But they're now doing blockchain stuff and got Elon Musk on this speed dial. But
Really?
they got deals in the trillions of dollars. But
Mhm.
yeah, but they're not. It's a blockchain thing, not necessarily crypto
Okay.
trading. But my brother-in-law, similar to your story, he and a friend bought a bunch of Bitcoin, and then let's say he bought it at 1,000, and at 20,000 or 10 or 20, he cashed out and bought himself a side by side.
Mhm.
His friend hung on to his and bought 2 houses in LA.
Wow. Wow. Wow.
But I don't think it's going to get that. This year they thought Bitcoin was going to make another jump, and it never did. It actually fell, and it's mostly just going sideways at the moment. So it's not really an opportunity. It may change.
Well, I still receive a newsletter
Yeah,
on a weekly basis. They're saying that Bitcoin can go to $100,000 this
yeah,
year.
yeah,
But it's like if you look at the screen here, NVIDIA. NVIDIA is not a new company. It's been around, and if you see the chart, NVIDIA was basically treading water until around basically right here, October 22, and it's just gone up like crazy. But before that, it was doing nothing.
Well, it
Really.
did. It had a pretty good rise up there until
Yeah.
to that one point, and then it slid for a long time.
Hmm. So, I think with anything, it depends on how you what your objective is.
Yeah.
And what I think is that with stocks, bonds, and options, is that people trying to make money quickly instead of the old-fashioned way.
Yeah, and
So,
it's kind of the thing. If you're impatient with it, you're probably going to get burnt.
mhm.
Yeah. So, and discipline and strategy, as you said, you mentioned money management.
Mhm.
Like, make sure you don't stay in losing trades.
Yes, and that's the thing about the psychology is that if you don't have your money management rules, actually one of the courses I took, they made us write a trading plan,
Yeah.
and you had to follow the trading plan. If you didn't follow the trading plan, basically you were kicked out of the program.
Yeah.
If you don't follow that, you can get emotional and say, "Oh, my stock will come back. It'll come back. It'll come
Yeah.
back." If it doesn't come
Yeah.
back, you double down on that and you lose more money.
I call that the optimism bias. We're kind of geared for things we want it to go up, but
Exactly.
there's no, it doesn't have to go up. Like those things, like when, and on your chart there, that place where there was a 6 month dump,
Mm-hmm.
you're sitting there wanting it to turn around, but it might not turn around for 6 months. And if you're holding, let's say you bought, at the top just before it dumps, and then it goes down 6 months. It's really a year until you even get your money back. So
Mm-hmm.
yeah, and it may never ever go above
Mm-hmm.
there. So that's why that long term strategy, unless you're doing the Warren Buffett thing or doing some kind of dividends, it's
Mm-hmm.
it's not a very good cash flow generator.
No, no, no. So that's why I am a note investor. I still, I don't trade. I basically buy, sell options in my retirement account
Yeah,
because it is like getting a dividend. So if I buy SPY, which is S&P 500, I buy that and sell calls against it. I'm getting money every time I sell the call.
yeah,
It's called the covered call strategy, which is one of the most simple strategies you can take advantage of.
yeah. I think I mentioned Troy Bouchard's strategy, and
Mhm.
it's really to sell a call,
Mhm.
and you've got money, made money from it, and
Mhm.
to some degree that's all you're banking on, whether it goes one way or the other. I think there's something you have to be really careful because you can get stuck. Like
Mhm.
one of the things that Ivan shared a little chart about the different kinds of option trading, and there's a little thing, and there's potential loss, and there's a few of
Yeah.
them. It's infinite.
Infinite.
And
Yeah.
if that doesn't scare you, that's kind of what Rodney was talking about with his margin investment. It went the wrong way, and it cleaned him out, right? So
Yeah.
Yep.
Yeah. I think the key to trading or in stocks is that when you're trading an option, you trade options on stocks that you don't mind owning. So again,
yeah,
why do I prefer an index like the SPY, S&P 500, or QQQ, which is the technology? Because those are stocks I don't mind owning.
yeah.
So, mhm.
And if you buy an option on something and you can afford to buy the stocks, because
Mhm.
like because your option may be $100, but it's maybe it's $10,000 if it
Mhm.
executes, kind of thing. So if you got an account where you can simply just buy the stocks if it happens that way. And
Right.
actually that's what they were intended for. Really that was what the options were, is if if the price went the right way for you, you just buy you end up buying the stocks for much less than market value at the time. It's the same as buying that, really very similar to buying a note at a discount.
You're right.
Yeah,
Exactly. Exactly. Yeah.
yeah.
Another strategy that someone might want to look into again is selling a put, which is basically the same thing as buying a call. Basically, when you're selling a put, you're selling, uh, you're positive on that stock at a certain price. So when it gets that price, it gets put to you, meaning that you want that stock at that price.
Yeah.
Mm-hmm. Yep.
There we go.
I wish I had talked to you, Dr. Ivan, when I was trying to venture in that space.
I wish I would talk to you. There's a lot of things that you need to learn about trading stocks. I have on my bookshelf, I have at least 3 books on psychology, and it talks all about psychology. It doesn't talk about anything about the actual techniques. It talks about where your mindset is. And there's actually a psychologist, I think he passed away, called his name was Dr. Alexander Elder, and he published a book, I think it was 400 pages long, on trading psychology.
Yeah. I've seen a checklist. Basically, it says if you're tired, if you're anxious about something, if you're worried about money, any of those things, walk away from the computer, go to the beach. Don't do anything, because you're just going to screw everything up.
That's true. That's true. Mm-hmm.
The other thing is when the course on day trading is generally they said, don't spend any more than 2 hours a day at it, because let's say you have a lot of success in the first 2 hours. If you get tired, you'll lose it by the end of the day.
Oh, another thing that we didn't even talk about is that if you're trading your money, and you have to have a certain threshold to become a professional trader.
Yeah.
And that's equivalent of 40 hours a week. That's when you get to write off the money. However, if you're trading, say, whatever you're trading, and you're making money off of that, in the United States, guess how much taxes do you have to pay? You're paying short-term capital gains. So whatever money you make, I think the capital gains tax is 36%.
Ooh.
So right off of that, if you don't keep good records, guess who's going to come knocking at your door come April 15th? Everybody's uncle.
Yeah.
Wow.
And the records can be very complex especially if you're making 3 or 4 trades a day or 10 trades a day, and then tracking all the losses and the gains for everything individual. So,
and I don't know if you know this, but do you know what is the maximum amount of money you can deduct for your losses, your trading losses?
No.
$3,000.
Yeah.
That's the maximum? Okay.
So
if
you need losses, you need to start up a restaurant.
Well, there's a joke in Wall Street is that do you want to make do you want to learn how to make $1 million in Wall Street?
How's that?
Start with 2.
Yeah. But the one guy I was taking lessons from, he said, says whatever you do, don't give your money to like a hedge fund, because they make you sound a waiver. They won't guarantee that they won't lose all of your money in the first week. So says if you're going, says for one, learn how to trade yourself, and if you do it right, there's no reason why you would lose anything.
Yeah, like I gave the example of long-term capital management.
Yeah,
they were averaging returns of 15 to 20% for a long time. But what happens is that I forgot the event that happened where they lost all the money, they went bankrupt. They lost that in like 6 months. They lost like 56% of their capital.
Yeah.
And these are guys that have won a Nobel Prize in economics, I think it was.
Yeah.
So.
Yeah. No, it's not easy.
It's not easy.
It's like it's like trying to win at the casino. You really
exactly.
can't.
And one thing, and I always think about these people on the internet telling you that you can make money, you can do this. I have I'm successful. You can earn X amount of money doing this, X, Y, and Z. Always ask them to show their trading account. Ask them if they can if they can block out their account number, the firm's number, the firm's phone number, and all that. Just show the P&L.
Yeah.
If they don't show their P&L, and they say they can show you how to make money, I have a bridge to sell you in the Sahara.
Yeah. Well, for one, if they know how to make money, why are they talking to you?
Well, a lot of traders. I mean, there's one. I don't want to get free. I know of a couple of firms that do this, and they show their P&L because they want to be transparent.
Yeah.
And they want to actually teach people how to do that. And I sent you one of the links on YouTube. Actually, since it's on YouTube, it's public. It's called Options Trade. He'll show you their P&L.
Yeah.
But there's one particular lady, she's on Instagram, and her handle is Loving Not Working. And I asked her, well, if you're so good, show me your P&L, wipe out the account numbers and everything. Show me what you've done. It's been 4 years, nothing. There's another guy. He went from YouTube to Instagram, now Telegram.
Yeah.
I've asked him, show me your P&L. Okay. Show me your actual trades. And if you show me your actual trades, then I'll sign up with you.
Yeah.
His response has always been, you're not ready yet.
Yeah. There's a bunch of scammers who send out notices like through Facebook and LinkedIn, and they'll say, for I can 10x your number and your investment in an hour, and I usually say, okay, give me the money and I'll split the profits with you.
And I wish Larry was here, because Larry and partials, I saw an example where he can make anywhere between 25 and 53% on a partial note.
Yeah.
And when you look at the stock market, a lot of these traders are making that amount of money, but with notes and with partials.
Yeah,
if your buyer does not pay, guess what? You take the property back.
Yeah, no, that was I really like that strategy, and it gives a lot of flexibility both for the investor and the person holding the note, because what is this example? If you needed money to pay college tuition for your daughter, then you can sell a partial out of something. And anyway, it was a really good strategy. So so that was really well done, and the returns are pretty darn good.
Yeah. So any more horror stories, Rodney?
No, that was it. I haven't been back since. I haven't left it alone.
Yeah, the story here is the good, the bad, and the ugly. Mostly we've had the bad and the ugly.
Oh, I told you the ugly. The ugly was with my Forex account. I traded the demo account for 6 months, and in less than a month, granted, it was only it was money that I could lose, but it still hurt.
Yeah.
Still hurt.
Well, the good part for me, for 2 years, I was riding high. It was going good. I didn't cash out anything. I just kept it in the same pot, and then, like I said, then it wasn't good. So
it wasn't good. Yeah. So Forex, like Ivan explained, that you're trading like American dollars versus the British pound or something. So
let's say you're Canadian, right?
Yeah.
You're Canadian, right? You want to go to Mexico. So your Canadian dollars are worth X amount in Mexico, say 38 times a month. So you're trading that difference. So, and that fluctuates every day with the news. That's another thing I didn't even talk about.
Yeah.
You can have a trade, you can have the best trade, you can have the best setups, and lightning strikes the Tesla headquarters. Bad news. Your trade just went south because it went against you because of the bad news. That's what stocks are subject to, because there's bad news.
Yeah.
And there's another thing I didn't talk about. In the past, bad news used to be bad for the stock. Now, bad news, say a company lays off 1,000 workers. That's good news, it's bad for the workers. What happens? The stock goes up.
Yeah.
So there are times where the bad news is good news and the good news is bad news.
So where I was going with
I'm sorry,
with
interruption.
Forex was Brexit, right?
Yes.
Yeah, it was like everybody knew the pound was going to dump
Right.
the day Brexit was executed, and I lost money because I knew it was going down, but I totally underestimated how much it was going to dump. I don't know. Do you recall? It was like maybe 30% of its value or something.
Right.
Yeah. So I had sort of pegged it at 15 and it went 30. So
Yeah. So where's the pound now?
it's just slightly more than the US dollar, I think.
Mm-hmm.
And at the time, it's probably worth about $1.80 US at the time.
Yep.
And then it dropped down to maybe almost par with the dollar.
Mm-hmm.
It's still doing better than the Canadian dollar.
Mm-hmm.
And
there was a time where the Canadian dollar was actually stronger than the US dollar.
Yeah.
That's when all the Canadians were buying properties here in the United States.
Yeah. A couple of times. Like sometimes it's just slightly $1.05, and then it was $1.15 for a while, but it's very, very brief.
Mm-hmm.
But I have some clients in Australia, and they're always horrified by the exchange rate because they're even worse than the Canadian dollar, right? So, yeah, and I guess the other thing about Forex is it's highly leveraged. Like there are two things. Is one, a small percentage could make money for you, change, and the transaction fees are very low, and it's leveraged, so it can be a good platform to trade on.
It can be, but again, it's Forex is one of the hardest markets to trade, and every year they lure more people in because you used to have a minimum of $1,000 to open an account.
Yeah.
Now you can open an account with $100.
Yeah. And you like the Canadian dollar, US dollar, it really hasn't. You need currencies that are going in opposite directions more. More or less the Canadian and US are just going micro changes.
Yep.
Mm-hmm. Yeah. So I think we've probably horrified people enough. So that's why you need to learn how to be a mortgage note investor, or even better, become a passive investor and talk to Ivan or Rodney about how you can get involved without toilets, termites, tenants, and trees, and of real estate investing. Were you here, Rodney, when we had a guest here? And we were in the middle of the conversation. He had said, "I got to go. A tree just fell on my rental house."
Yeah,
so we've added the tree to the teas.
Yeah, we added.
So actually, Dr. Ivan, you do have a passive investment opportunity for people that's associated with notes. So do you want to describe what that is?
Yes, we have passive investment opportunities with notes on mobile homes. And we're paying right now 10% on our notes, and we're looking for anyone that wants to earn money passively without dealing with charts, tenants, and toilets, and no stops.
No stops. Yeah. So that's pretty good. So reach out at the notedoctor.com, and you pay out quarterly, right?
Yes, we pay out quarterly, yes.
Yeah. And for the most part, you're looking after all the nuts and bolts, because the note investing, there are other things to it. There's, lots of legal paperwork, sometimes lawyers, sometimes servicers. But your passive investment is the people, they don't have to worry about that. That's your headache.
Yeah, that's our headache. Our notes are originated by and reviewed by either a lawyer or a registered mortgage loan originator. And if the borrower does not pay, we take over the note and we're responsible for that.
Yeah.
So that our investor doesn't have any headaches and no margin calls. Right, Rodney?
That's right. That's a good thing.
No stinking margin calls.
Margin calls, exactly.
Do you have any offers, or what kind of investors are you looking for?
We currently have right now 6 notes on our board.
Okay, 6 notes. Awesome. And what kind of what kind of investment? 50,000.
We're looking. Our smallest note is 30, and our largest is 60.
Okay.
Yeah.
All right. And Rodney, do you have any notes for sale?
No notes for sale, but I'm redeploying some capital now, so I'm looking for investors that might want to passively get a great return. Again, always secured by the real estate.
Yeah.
That's where I am right now.
Okay, that's great. Well, anyway, this has been an interesting discussion for sure, and yeah. So I guess we'll figure out what we're going to talk about next week.
Well, I hope I didn't scare anybody enough so that they'll not trade. But I think what we need to do is talk about financial education, because this is all part of my financial education.
Yeah.
Learning about stocks, bonds, mutual funds, real estate. It's all part of that.
Yeah.
Hopefully I lost enough money so that you can get just other people can educate themselves.
Yeah.
And truly, there's a way to make money and be profitable if you are educated and you know what niche you're investing in. So
and
that's why it's been around for a while.
Yeah, going back to the Bruce Lee quote that you had about, and related to just taking one thing, is if you pick one strategy, one item, and you master that, learn how to trade effectively and not lose money, then once you figure that out, then you can leverage that and scroll it. Like I right now I've got tens of dollars in little crypto. So, but the thing is that when I find something really worthwhile, I can leverage that. Like you get something on a tear up, you just keep on adding more and adding more, right? So it's just right now those opportunities are few and far between with this sideways market. Yeah. Anyway, good. Yeah, that's probably a good topic, is to overall diversification of your investment portfolio. Exactly. Yeah, is a way to go, and you could hold some stocks or something that has sort of reasonable return on it. Low risk. Reasonable return. Yeah.
Yes.
Okay. All right. Well, thank you very much for joining today, and we'll see everybody next week.
Okay, great. Have a good weekend. Okay.
Enjoy the weekend. Yes.
Bye.
Take care.
Bye.